We're going to get into the interesting stuff in financials, and hopefully you get a lot out of this. I know it's actually a really good time to talk about this with internal controls, everything that's going on in the world, everything that happened through COVID. Internal controls has been really a hot topic with a lot of my board members, especially when, COVID hit and everybody said, we have to go virtual. How are we going to do this? How are we going to handle internal controls? Are we going to physically sign checks? Are we going to be able to have electronic signatures? There was a lot of unknown. And I have to give a lot of credit to a lot of my managers out there that really took it under their wing and made it happen, because we didn't have a lot of issues in a lot of our associations because the managers took control of it. Board members got involved, they contacted their professionals, and they really made it happen. So I hope today is going to be interesting to you. I will make the slides available to anybody, but we're going to have some interesting topics today. And then Bill's going to talk a little bit about the tax area, which really does benefit you on the internal control side. So next, okay, no, the slide's not working. There we go. A little bit of jokes to kind of lighten the topics here, because accountants are just so funny. So we try to make it a little bit exciting. I'll take the job if you can pay me under the table. Internal controls. Should we be paying people under the table? Should we be looking at things? IRS. A lot of times, a lot of my board members forget that you are a profit organization. You are not a nonprofit. And even if you are a nonprofit, you should still be working to have good controls in place, financial reporting, regardless of you're an association. I'll have board members tell me, well, we're just a condominium association, when they're running $10 million through that association. It's still as important to run it like a corporation and make sure there's controls in place. However, by using alternative methods of accounting, so I'll hear people say, well, the alternative method. I don't know what alternative method is. I know I went to college for it. Never heard that word ever in my life. Or we'll find the creative way to make this happen. There's really no creative way in accounting. Accountants are black and white. We're kind of boring. So we don't have this creative way to make things happen. There are good controls. There are bad controls. There are good decisions. There are bad decisions. There is mismanagement. There's fraud. So we want to make sure that we prevent this. We try to prevent things from happening. You're not going to be 100%. You try to build the foundation to make things preventing it from happening. Internal controls gets us where we want to go without surprises along the way. Internal control is everyone's responsibility. Internal control is me. I love this quote. The reason I say that is I'll hear so many board members say to me, that's management's responsibility. That's not us. That's not for us to do. It's everybody. It's everybody from the board members to the management, to the external auditors, to even internal auditors, if you have them. It's everybody's importance to put things in place and make it happen. Not only putting the policies and procedures in place, but making sure they happen. I'll have many people tell me, well, we have a procedure for that. Are you doing the procedure? It's great to have it on paper, but are you actually making it happen? And that's one of the things we're going to really discuss today in regards to how to get there. What are the preventative measures? What are the detective measures to make sure that we're running our business like a true corporation? Let's talk about some internal control facts and myths, because we know it all exists out there. Internal control starts with a strong set of policies and procedures. The fact is, it starts with a strong control environment. It means, I always like to say this in any class I teach internal controls, and it's true in every business you run. If you use this, tone at the top, everything comes from tone at the top. The president of the association is tone at the top. What are they passing down to their board members? We want to make sure we have good morals, good character. We're doing things in good business perspective. Passing that down to the other board members and passing it on to their manager and to their residents, because the ultimate control comes from the board of directors. I love when I do an audit and I'll hear, well, that's the manager's responsibility. The manager ultimately is taking direction from the board of directors. They're advising you because they have the license and they don't want their license on the line. So they're advising you what to do, but the ultimate decision maker is the board of directors, the board of governance in any corporation. Myth, internal control. That's why we have internal auditors. Management is the owner of the internal controls, even if you have internal auditors. What that means is that's the board of directors. They're ultimately responsible for the internal controls and how an association is run. And you're going to see through my presentation where I give you examples, things that can be done, can be improved on. And also staying up with technology. A lot of times when everything first came out and auditors were saying, oh no, this technology is scaring us. How do we get it controls in place? Because technology can sometimes be scary in the sense of, you have electronic signatures out there and people say, oh, well, I don't like doing that. But we have to keep up with the technology. And as auditors and auditing firms, we have to keep up with it, that we can audit those procedures and make sure that, yes, we want to stay on correct with the times and what's happening, but make sure the controls are in place. Myth: internal control is a finance thing. We do what the controller office tells us what to do. That is an interesting point. I'll have board members say, well, whatever the bookkeeping company tells us. That's not what should be going on. You should be having control of your own finances, and the bookkeeper is taking advice and looking at your financials and taking the invoices and coding them when the board has made that decision. The controller is not in charge of all of your finances. The board of directors is ultimately in control of what goes on financially. Myth: if controls are strong enough, we can be sure that there will be no fraud and financials will be accurate. It's a very interesting point. There is never 100% protection. Even if you have every control in place, people can circumvent controls. It happens all the time. You hear big government offices, they have 10 layers of controls and fraud took place. So just because that you have controls doesn't mean it's the end all. You still have to keep up on them and make sure that you're testing them, that they're taking place. Internal controls provides reasonable, but never absolute assurance. I always try to stress that to my boards. Nothing is absolute. Absolutely not. Even board members. It can happen internally with board members. There could be collusion. So we want to make sure that all the controls are in place, that everything is being looked at. Because in associations, you are controlling other people's money. The most important thing is that you have controls, that you try to prevent fraud, because it is other people's money. It's not your own corporation. You're collecting it from other owners and distributing it to pay the bills. What is internal control? It is a process within the organization to provide reasonable assurance that people can look at that as the owners and saying, okay, I want to know how this takes place. And they can get an answer and saying, this is what we do to make sure there's protection on your money. We're making sure that we're looking at things. We're looking at contracts. Also, internal controls is transparency. You're at board meetings, making sure the owners are educated on what's going on, making sure you're documenting it in the minutes. So if someone says, oh, well, that's the landscaper we picked. Did we have bids on it? Let's go back to the minutes and look. Transparency is great in internal controls. Make sure they're reliable, accurate, and timely. Why I say that's very important. When you're releasing financials or you're releasing minutes, make sure it's timely. You're not giving a report to somebody 9 months later and saying, this is our report. It's not timely. You should be having a monthly financial statement timely, making sure everything is processed timely. Bills shouldn't be paid 8 or 9 months later. That's not good internal controls. In compliance
Nicole, can I just jump in for a second? One of the things in internal controls that's very important that we see on the tax end is protecting individuals and businesses' tax reporting information and keeping that secure so that people don't have access to it.
That's a great point. Absolutely. It's good. And making sure, and to Bill's point, in compliance with policies, plans, procedures, laws, and regulations. A part of your internal control is making sure you're abiding by, as Bill stated, IRS regulations. You are still a corporation. Are you abiding by everything? 1099s, W-2s, if you're self-managed, if you're with a management company, they handle that. Are you abiding by Florida statutes? There's a lot of changes to statutes right now. Are you taking your certification courses to make sure you're up on the new laws, 718, 719, and 720? As a board member, there's a lot to know. You know, your managers are getting educated on it, but are the board members doing that to make sure the controls are in place, that you're abiding by all of the statutes and IRS guidelines? Assets, are you safeguarding your assets? For example, associations, we'll see this all the time. They have inventory, they have assets, they have golf carts, they have things that can be sold for a gain or loss, but they have no schedule. They don't keep track of it. So my question to them when we take on a new client and we go out, do our walkthroughs, and we see golf carts and we say, can we see the schedule of our golf carts? We don't have a schedule of our golf carts. Well, how do you know one's not missing? Oh, that's a very good point. We really don't know that. So do you have safeguarding all your assets? Are you safeguarding your assets with your banks? Are you making sure you're using great banks that are association driven? Making sure that you talk to them. Are you in the best measures to safeguard those assets, your cash, which is a very important asset in that association? Are you dealing with the right attorneys to make sure they're safeguarding you on the accounts receivable, that you're abiding by all those laws, how to collect it if somebody falls into delinquency? There should be policies and procedures for that. Of the most economical and efficient use of your resources. Your resources are your professionals, your attorneys, your contractors, your managers who have the most knowledge of anybody. They're the ones that are licensed. Are you using them efficiently? And then the overall objectives and goals are met. What are your goals as a board member in the association? To make sure that you're financially secure, to make sure that you have controls in place to prevent fraud, and making sure that you are being as transparent as possible to the owners. I know that word is over and over used in associations, transparency, because you're reporting to the ultimate people is your board, is your unit owners, and they need to be educated. Also, people that are buying into your community. Are you a community that people want to live in? Are you financially secure? Where are your reserves? Do you have loans on the books? Do you have equity? Is the board doing their fiduciary responsibility? Very important internal controls. And intended to prevent errors or irregularities. And then what is the corrective action if there is any of that? Fundamental concepts of internal controls. Internal controls is a process. It's never in a means to an end. You don't put something in place and say, we have the policy, it's over. You always want to be improving that. What we could do better? Always reevaluating it year to year and saying, is there something better we can do? Where are we falling short? Every company should be doing that. Condos, HOAs, private companies. What can we do that better? There's never an end to internal controls. Internal controls affected by people at every level. There are different tiers in internal controls. There's from the board of governance to the managers, the management company, to the owners, to the employees. There is everybody's involved in a part of that internal control process. It's not merely manuals and forms. Let's fill out a form and it's over. You want to make sure you're implementing that on a daily basis. Always remember, internal control provides assurance, provides reasonable, not absolute assurance. It's very important to know that internal controls. That will make you as a board member and manager know you should always be reevaluating it. It shouldn't be just that's over and we're in a good shape now. Internal controls cannot ensure success for. This is what I was talking about, that it's not going to ever be absolute insurance. Bad decisions. I always put that as number one, because I'll have people contact me and say, the board did this and they're committing fraud. It's not fraud. It might be a bad decision, you think, but it's not fraud. And that's one of the hardest things in internal controls to prevent is a bad decision. Are they making good business judgment rule? Are they talking to their attorneys first before they're signing contracts? That's one of my top ones on bad decisions, is making sure you are reaching out to your attorneys when you're signing contracts. That's a good decision. You can't worry about the price on that. You don't want to make a bad decision and be stuck in a contract. Poor managers. Somebody that maybe doesn't have the experience in the type of high rise you are, or doesn't have the background to be able to do that. You always want to make sure that you're hiring somebody that works for your community. Every community is different. I'll have people say, well, every HOA and condo is the same in Florida. It's so inaccurate. Every condo is so unique with their amenities, what they are financially, what is required, what do the owners require for them? Unethical behavior. Probably one of the hardest to control is if you have somebody on the board or you have somebody in management that really has unethical behavior. They don't care. They're in it for their intent or what they feel they're going to get out of it. One of the hardest things to control in internal controls, collusion. Collusion and kickbacks are probably the two hardest, absolute hardest things to uncover in an audit or in internal controls, having an internal auditor. It was interesting. I always bring up this story when I talk about this because I've been in the industry for 18 years now, and only one time a vendor came forward to me and said that he had issued a kickback. And I think he was afraid that I was the IRS or something. And I was not. We were just doing our auditing procedures, and he confessed that he had did a kickback to the manager. That rarely happens. Collusion, very difficult to uncover. You can do procedures as a manager or as a board member and try to uncover it is one of the hardest things to do. So what, as a manager or as a board member, you try to do is you try to have full transparency. If you're hiring a vendor, making sure you know who owns the company. Is there any relationship to the manager? Is there any relationship to the board of directors? If there is there full disclosure? Is that person refraining from voting? To make sure that you're doing everything you can. Did you have 3 bids to see that all of it is apples to apples? Also, when the vendors come in, if they're doing large projects on your building, have a sign-in sheet. So there's proof they were there, that they did the work. There are things to put in place that you can actually look at. Go on Sunbiz, see who owns the company. It's out there. It's in Florida's public knowledge online that you can see who owns the company. And then overriding controls. That is one of the hardest things to prevent too. You know, you're required 2 signatures on a check. So there's an override of controls. A board member says, there's nobody in town, I'm just going to sign the check. The banks aren't your internal auditors. That check is going to go through with 1 signature. Their job is not to audit your internal controls. You're supposed to do that. So that check will clear. That's an overriding of controls.
Hey, Nicole, I got a few questions here.
Sure.
So should an attorney be safeguarding the AR? Isn't that the manager's and the board's responsibility? At what point should that attorney be stepping in?
Great question. So first of all, when you need a policy in place of after what date that you have tried, you've sent letters that you've tried to collect. Most people say 30 to 60 days, and then they get their attorney involved because there's legalese that has to handle. So the first step is they'll send a late letter. They'll say that, you know, they're late. And then if there's no response and they're not getting paid, that's when they should be reaching out to the attorney. Always have an internal policy that if your maintenance is month to month, and if they're 30 days late, you might want to say at the 45th day, you're turning it over to the attorney. But what I recommend is having the policy in place so everything is consistent with every owner. You don't want to say, oh, well, this owner, you know, they've been good for the past. Let's give them another 60 days. You have to be consistent with every owner. So have a policy in place.
What about the criteria for contracts that should be reviewed by the attorney? What type of criteria would you suggest for contracts being reviewed?
Absolutely. So I always recommend absolutely any contract should be reviewed. And I know people will say, well, I signed a $500 contract, but there might be some stipulation in there that how they can get out of it or they can't. There's so much legalese that gets put into contracts. And especially if they have an attorney, I recommend that you always have your attorney involved. The cost is so low compared to what can happen if you get into a lawsuit, even if it's a $500 contract. Attorneys are there for a reason, and they are there for the benefit of the board of directors. The board of directors are not paid. They're volunteer boards. They don't want to put anything where they're held personally liable. So I would always have that intent. And attorneys are very good at looking at that. And if it's a simple contract, it's probably going to be a simple cost to do it.
Amazing. Thank you.
You're welcome. Who is responsible? So this is a very hot topic in all my classes that I teach, because I always hear it's the manager that's responsible. No, the board of directors is the first person responsible for everything that happens in that association. Management can give guidance. Management companies give guidance. They're great at that. They have the expertise, they have the license, but the ultimate responsibility falls on the board of directors. That's why it's important to get the certification classes. It's important for board members to have all areas of expertise. It's great to have on the board somebody with an engineering degree, an accountant degree, a law degree, that they can give that background, landscaping, having committees that people in the community offer that background. It is excellent. So you can really run the community like a true corporation. And then personnel, that would be your lower level employees. Ultimately, they're not going to be responsible, but they are responsible in the sense like a bookkeeper to make sure that things are being coded correctly and inputted into the system you have correctly. Okay, let's not go into the next slide. Here we go. Responsibility for internal control. The board of directors, as I stated, management is primarily responsible, and then the independent auditors. I'll have many boards say to me, we have an audit done every year, so we don't have to worry about it till the auditor comes in. Well, the auditor's job is not to put your controls in place. Our job is to audit you and gain an understanding of the internal controls and then report back to you significant deficiencies. Our job is not to implement that. We do give recommendations, and if any of you I have as a client, you'll see at the year end, there is a report, you know, with significant deficiencies in internal controls, and we give recommendations. But if you have no controls, there's a chance that you may not get even a clean opinion because there's a concern that there's something going on in the community. So you always want to build those internal controls so the auditor can gain an understanding of that. Reasonable assurance, not absolute assurance. If anybody notices, that's kind of the highlight of today, is making sure everybody understands it's not absolute no matter what happens. Limitations of internal controls. It must be balanced by the cost of the control. Every control has a cost associated with that. That is very important in this industry. I'll tell you why. Associations are not Ford Motor Company. They're not GM. They're not going to have 5 people doing accounts payable. They're not going to have 4 people doing the accounts receivable. And no auditors are going to come in and say, you don't have enough segregation of duties because you don't have 10 employees. That is not a cost benefit. That would cost you more money versus what the benefit is. The important part is segregation of duties. If you have one person that's doing the accounts payable, the accounts receivable, the board then, which should be overlooking, signing checks, the manager approving the invoices, there's a way to get segregation of duties without having more cost. And if you have a trouble with that and you are at an association, you think, how do I handle this? Always reach out to your external auditor. They can give you advice that isn't going to cost you more, but giving you the reasonable assurance to get good internal controls in place. It can be circumvented by collusion of 2 or more people, 2 or more board members. It could be collusion. It could be a board member and a manager. Collusion is a limitation of internal control and overriding by management. If a manager has the ability to override controls, that can be a problem. Same thing with a board member. If a board member comes in and says to the manager, listen, this vendor came in, I'm going to pay him and you just reimburse me. Don't worry about it. No, you don't want to circumvent any controls. You want to make sure you're protecting your assets. Internal control applies to the association as a whole. Every operating division of the association, every function of the association, and every employee falls under internal controls. It's very important that you kind of have a chart, an organizational chart of how it flows in your office. Board of directors, manager, employees, who's overseeing those employees, and making sure that that is followed. So it makes for a smooth operation in your corporation because you are all corporations. Regardless of people want to say we're a not-for-profit, you're still a corporation. Control activities, policies and procedures are put in place to ensure that management's goals are carried out and to limit the risks that have been identified by board, such as approvals, segregation of duties, reconciliations, building security, computer softwares, password restrictions. Very important in many aspects is passwords. So I'll have people that have QuickBooks and they have one password, they have an admin and then they have a password. And every board member and everybody has access to that QuickBooks under one password. Major problem in internal controls. Who went in and decided to make changes to the financials? Who went in and changed a check number? Who went in and printed a check? There's no audit trail. So if you are giving people access to a software, you should have a separate user and a separate ID and have them read-only access. There's ways to control that and have good internal controls where things cannot be changed. QuickBooks is my love-hate relationship with, and Bill I know has the same thing with QuickBooks. It allows you to do too much. And then finally, they did add an audit trail, which is great, but it allows you to delete, which accountants do not like that word delete. We like journal entry. So you want to make sure you do have restrictions if you have those type of programs. The foundation for all components of the internal control. Tone
Hold
at
on,
the
Nicole.
top.
I got a few
Yes.
questions.
Of course.
I love your pace. I love your energy. But I do have some questions rolling up. First of all, Nicole from Bridgeview says great job. She really is enjoying the class. So thank you, Carol, for the shout out. And then
Thanks, Carol.
the internal controls, should they be different from self-managed or management companies?
Absolute fantastic question. I am going to talk about that, but let me give you a little highlight because I would like to answer your question. Absolutely. So many of your management companies, your very high-end management companies, the one that have exceptional internal controls, you are actually, as a board member, relying on those internal controls. As auditors, we go in and we evaluate all the internal controls of a management company. So you're relying on those. So you are going to have less on your plate. When you're self-managed, you have more on your plate as a board member. I'll tell you why. When you're outsourcing to a management company, and I'm talking great management companies that have segregation of duties, they have regional directors, they have managers, they have accounts payable, controllers, they have CPAs on staff. They have so many internal controls in place that it is a lot of preventative measures they're doing, which is excellent. When you're self-managed, you have less of those resources. It doesn't mean you can't have good internal controls, because you absolutely can, but you're going to take more time and effort as a board member to do that. For example, if you're self-managed and you have payroll, there's a lot of payroll compliance that you have to follow. When you outsource to a management company, that's gone. They have the employees, they're doing the payroll, they're doing the health insurance. Now you're self-managed, you have health insurance. Are you abiding by that? There's rules now in place. You can't just reimburse somebody for health insurance. There's a fine of up to $37,000 a year if you do that. It must run through payroll. Are you filing your payroll tax returns? Human resources. Are you making sure that you have somebody in place that understands human resources, that you're not sued by employee? Do you have workers' comp? There's so much more involved in self-managed versus management company as a board to make sure you're following good internal controls. So I hope that answers your question. When you have a management company, you're really outsourcing it and relying on them. And a lot of times they'll walk you through their internal controls. Okay, next slide. Control activities, the do's and don'ts of internal controls, because we have to show examples. We have to now, after we've given you the background and really educated you on what internal controls are from an accounting perspective, what are they? What should we be doing? The fun and exciting part is the examples, because we love to get into the details. Approvals. Who is approving? Always wanting segregation of a duty with approvals. So if the board is signing the contract and the invoices are coming in to be paid, the manager knows what's going on the community on a daily basis. They should be looking at that invoice and knowing, yes, this was done. They approve it. They code it because they know where it goes to. Then the board gets those invoices. They ultimately should be approving it and then signing the checks. That's the authorization, is they should be signing off on it. They need to trust and rely on the manager that it took place. Number one example of that is products that come in. Home Depot, you have Home Depot, and you see the bill at the end of the month. How many board members look at that Home Depot and say, yes, we got 2 bolts. We know we got 2 bolts. Oh, we got toilet paper from Home Depot. They don't know that. They're not there every day. They need to rely on the manager. And what a good point of that is, say they have a maintenance man. He should be bringing the stuff back. The manager should be seeing what he brought back, approving it, and that's good internal controls, because there's segregation of duties. It doesn't mean collusion can't happen, but it's what you're trying to do is preventative measures. Authorizations and verification is the board signing those checks. One thing auditors look at is the signatures of checks. And I know a lot of board members and management companies get irritated when the auditor says, we need to see the copies of the checks. Like, why do you need, this is 2022, we don't have checks anymore. Well, even the microfiche checks, we want to see the signatures. It's an important part of internal controls that we know that 2 signatures took place. Now, a lot of the new technology is the board members have logins, they approve an invoice, and the signature automatically goes on there. That's fine. That is fine because they have separate logins. This is talking about management companies that use the electronic version of logging in, approving it, and their signature goes on. We have gotten very comfortable with that whole process, especially in the large management companies that do that. They have a lot of verification through their systems and controls in place with those signatures set aside. We have really dived into it and understood it, and we are comfortable with it. It doesn't mean things can't happen, but we've gotten very comfortable with that. Reconciliations. Who is reconciling the bank? Making sure the person that is actually entering the invoices also should not be approving and also should not be reconciling. We had a situation, this was a fraud example. There was one person doing everything. She was approving it, putting it into QuickBooks, putting in a name in QuickBooks. So when it printed on the reports, the boards thought, oh, that's who she's paying. She's paying the insurance company, great. Well, She went in after the reports were done, changed the name to herself, printed checks, cashed the checks herself, and reconciled the bank. The boards never saw the actual check was made out to her, because you can go in and circumvent those controls because there was not a segregation of duties. Somebody reconciling the bank should be different than people that are approving it and signing checks. Absolutely should be a difference in segregation of duties. Securing your assets, securing your cash. Most important is securing that cash. Are you having the right controls in place for your money? Are you talking to your bankers, the great bankers in this industry, the ones that do this all the time with associations? Are you using ACH? Are you using direct deposits? How are you doing that? Is it a better plan to do that versus bringing checks into the office and not allowing cash? Interesting story. I was doing an audit. I was on site, walkthrough, and the manager was telling me, we never accept cash. I said, that is a great procedure. That is something you don't want to accept cash. It's walk through the door, a unit owner. Here I'm paying $5,000 to pay my accounts receivable. It was perfect storm at the time. I was sitting there. I said, you don't click it. This never happens. This never happens. It never happens. But procedures in place. That's another overriding of controls. I'm not saying you don't want to accept that, but if somebody does come in and your policy is no cash, you could say, ask them to get a money order, or you could say, okay, if we do, we're going to let the board know we accepted the cash. We're going to have somebody else separately count it, make the deposit out, and I'm going to take it to the bank. So there's segregation of duties and proof of that, and have somebody sign off on it that you've received it. Performance reviews, very good internal controls for your employees, reviewing their performance. What are they doing? Are they doing a good job? Giving them feedback, very important, because you want to make sure you're evaluating your employees too, your bookkeepers, your managers, your maintenance staff. One of the things I always say in auditing too with internal controls is evaluating somebody's lifestyle. It's interesting. We did an association many, many years ago, and it was a community that the association was a great community, but the homes were like 100 to like 150,000, and the board member was interviewing to do the audit, and he's like, oh yeah, I just went out there and bought that brand new Rolls Royce. It's a little strange that a president of the association's driving that. Lifestyles come into play when you're talking about internal controls, things that don't add up. That's also an auditing aspect too, is looking at that and say, does that make sense? Does that make sense what they're doing? Are their performance in the job? Are they coming in on time? Are they coming in? I've had a situation where they were doing the fingerprints because they had to change it because employees were coming in and logging in for other employees when they weren't there. That's stealing time. That's an internal control issue. You want to make sure if you're self-managed, how are you controlling when people are coming in and coming out and making sure they're not stealing time? And then information system controls, your computer systems, your passwords, your payroll, login payroll, ADP, or any of the programs out there. Some of them have automatically on your phone. You can log in right through your phones. So things are really up to date on technology, but making sure that it is safeguarding and it's being done correctly. Control activities.
Nicole, real quick. So what about when vendors are set up to receive electronic payments in lieu of hard checks being cut? What's the control for that process?
Sure. So it's a great question because we see it all the time in auditing. And a lot of times it goes through the banks. The banks are doing that. I don't have a problem with that if the process is when you're logging in as a board member, you have a separate login and you're logging in to see the invoice to be paid. And you're approving that. You're approving the invoice and then it's electronically being paid. There's not a problem with that. That's actually happening all over associations, especially through the pandemic. They really wanted to get to systems that they didn't have to be in the office hand signing checks. So there's no problem with that. What you want to make sure is the system you're using has controls in place that you have separate logins and who's approving that invoice to be paid. Control activities. Who's initiating the transaction? Who's approving the transaction? Who's recording the transaction? Who's reconciling the balances, handling the assets, and reviewing the reports? Always two sets of eyes. Absolutely. And especially reviewing the reports. I tell my board members, you should be getting a full financial report that includes every type of financial report, bank statements, accounts receivable reports, and a check register. You always want to see the bank statements. Don't always say the balance sheet and income statement is enough. I'm going to look at the variances. That doesn't mean that there's not something going on. Always include the bank statements. Monitoring. So monitoring is a big important part of internal controls. Board of directors and management should assess whether the internal controls are being followed and note corrective action. Board of directors and our management state, we have controls. How do you know? You should always be testing those internal controls as a board member. For example, you approve an invoice and you sign a check, and that now went to another board member to sign a check. When the bank statement comes in, check that there were 2 signatures on the check. Make sure that it didn't go out with one. There are ways to test those internal controls to make sure they're working. Internal controls may be preventative. Stop something from happening. I cannot tell managers and board members enough. Preventative is the way to go. You want to make sure you have as much in place to prevent something from happening than detective. Detective determines how and why it happened. It's after the fact. It's after the fact if there was a mismanagement. It's after the fact if fraud happened. And then you have to find it and then get a corrective action. It's better to have all the measures in place first to try to prevent it than detective and corrective. But you want to, if something detective is testing those internal controls to see if something did happen. Your auditors, when they come in, to see if they're detecting anything that went wrong in internal controls or in your audit process. Was there any fraudulent activity or mismanagement? And then follow detective controls will allow for recovery from the error or unexpected event. After something happens, you need to put in corrective measures. What did we do wrong that there was a failure internal control to make it better?
So Nicole, we have someone that an association recently allowed their accounts to go over 300,000 K before it was transferred under the $250,000 threshold. What measurements should be put in place since this continuously happens? It's kind of a repeat offender situation.
Great question. So it's something that comes up in the audit. It's called the FDIC exposure, something that's over 250,000. First thing would be I'd be reaching out to my bankers and saying, what are the vehicles do we have in place? Like Jamie Gelfand, reaching out to her and say, what do we have in place that we could do to prevent this? For example, the insured savings accounts, the sweep accounts. Maybe we want to put our monies into CDs and diversify that money. Looking at ways to do that. One of the things I try to recommend to my boards, and that was a really good question, is sometimes boards will come to me and say, we need to open 10 bank accounts in 10 different banks. The problem with that is confusion, and it causes issues on your financial reporting. You have 10 bank accounts, 10 reconciliations, money's all over. Where'd this money come from? If you reach out to your bankers, there's many vehicles they can work with you on. You can have less bank accounts and then not have the exposure over the FDIC. And they have many. So my first thing is reaching out to your banks to see why it keeps happening and what they can put in place to prevent that from happening on a month-to-month basis. And there are many vehicles to do that. And the bankers are excellent.
Yeah, and that's great. I love it. And in a situation with electronic payments, how can a board member refer back to the invoices to see if they've been paid or not? Should either the bookkeeper or the property manager kind of be providing a detailed report?
Yes. So when you do electronic payments, you've paid the vendor out. The most important thing is the month-end report. When you receive that month-end report, you should be getting the bank statement and the check register. So you will see that electronic payment made because it has to be recorded on the financials. Even though you made an electronic payment, it gets recorded into your software if you use TOPS or if you use GenArc or QuickBooks. What happens is it gets recorded in the financials. Now, as a board member, you get the monthly report. You can see the check register that was paid, and you can see the bank statement showing that it cleared the bank electronically. So there's ways to prove that all around. Physical controls of assets is making sure that you know every asset you have, your furnitures, your fixtures, your golf carts, and having a report of that. Payables review and approval of the vouchers. Payables are who you're paying your invoices, who's approving them, who's reviewing them to make sure that you receive the item and the work was done, and then the signatures on the account. And then reminders of policies and procedures and expectations. You have to have expectations. What are your expectations of the manager and the controls in place? Once you establish that, establish the policies and procedures, now you need to perform them. Detective controls, accounts reconciliations. Great question somebody just brought up about electronic payments. The account reconciliations is detective. You should be able to look at them and see that that check cleared the electronic payment. Management review of reconciliations. That is the board of directors and the manager reviewing those reconciliations. Physical inventories, maybe once a month, once a quarter. You're going to go out, count the golf carts, make sure everything. I use golf carts because we had an incident where they didn't know where one was. So it was an interesting situation, but counting those, making sure you have them. If you supply to the owners different things where they're on inventory, always do a check on that quarterly. Do we have all those supplies? Reconcile it to what is on the financial report. Review of budget to actual. Not enough people do this. You should always be reviewing actual to budget. Why is something over or under? Looking at the detailed general ledger and saying, did we overpay somebody? Or is it just because we had some plumbing issues this year? Always good to investigate. That causes detective to see if something is going on. Year-to-year expenditure trending. Looking at last year to this year. Why are we having so many plumbing issues? Is something going on? Why is our landscaping contract different than last year? Yes, inflation is here. They've had, great. You have answers to everything and you can actually make educated. And then your auditors, your year-end auditors is another eye at year-end to be able to give you recommendations of what's going on. Corrective controls, error communication and reporting, documentation systems and processes, disciplinary actions. If something was wrong, if there was mismanagement, how are you going to handle it? And is there disciplinary actions? Did somebody do something that means for them not being there? Is it means for a board member that they shouldn't be a board member? They're doing things that are immoral. It should be a corrective action and it should be a plan in place and follow through and then going back and evaluating what we need to do different. Key issues for associations, segregation of duties. Doesn't mean you need to hire more people. It just means you need to make sure that they're segregated, that not everybody is doing one thing. Lack of resources. I always say to my companies, even our small companies and Bill too, you never have a lack of resources. It's just you need to find an inventive way to make a segregation of duty. Doesn't mean add more people. Be very creative in the sense how you can do that. A lot of it is just accountability. If people know you're looking at the month-end financials, they know you're looking at the bank reconciliation, it's less likely they're going to do something because there's accountability on those financial statements. Trust the environment. Addition of new responsibilities and technical knowledge. Maybe add on some things or take some things away and give it to someone else. What's interesting is they always say this in auditing. When I was in school too, they always said, you'll always find something when the bookkeeper never goes on vacation and you mandate a vacation. Something isn't right. I always say, who doesn't want to take a vacation? We all are ready for our vacations. Anybody that says, I don't want to go on vacation, be a little skeptical of that. There's always something that comes out in the end. And as we know, we all want to take those vacations. Let's give some examples of internal controls related to the financial matters. 2 signatures on check, electronic or handwritten. No rubber stamps. I can't say it more than enough. I do not like rubber stamps. No auditor does. I one time went in to do an audit and they had them all across the desk. I said, are they the board member signatures? Yeah, when they're away, we stamp their names. I'm like, that is just not good internal controls. Not at all. Don't sign blank checks. Don't sign blank checks and go away for the summer. That is not good internal controls. Anybody could break into your office. Anybody could go out and cut a check to themselves. Never do that. You're actually making internal controls terrible in the association. Question unusual items, things that look out of the ordinary, question it. Your job as a board member or manager is to question it. Limits to authority. Who has the credit card? Who has the ability to purchase on that credit card? Who's looking at those credit card statements? Supporting documentation. Board members should always be looking at supporting documentation. Very important. Staff member should prepare journal entries. Then a supervisor approves them and posts them to the financials. Another segregation of duties. You can even have the board members approving journal entries. Staff member who is in receipt of the money does not always account for it. Money should often be accounted by 2 staff members. If you collect cash, absolutely. My recommendation is no cash. And in today's world, most people are not paying in cash. It's all being done electronically. Monies that are received over the counter or through the mail are taken to the bank by a courier or a different person other than the person who opened the mail. Opening the mail, people always say, I don't understand the issue. Opening the mail, somebody that opens the mail and does everything else can be a major issue. There are things that come up in that mail that you're not aware of. There should be somebody separate. Maybe your receptionist opens the mail separate from the bookkeeper and the manager. 2 staff members should be involved in wire transfers. Wire transfers, there needs to be documentation on a wire transfer, and only board members should be approving wire transfers. That should not be anything that's left up to the manager. And most banks, I think, do require it because they are the signatures on the account. 1 staff should prepare timesheets, then a supervisor approves it. With payroll, when you're self-managed, payroll is a high-risk area in internal controls. In times of ghost employees, who's looking at those payroll reports? Do you have all the employees? Are they taking out federal wages? I'm going to give you an example in the future of this presentation. 1 staff enters pay rates, entered by HR, payment by payroll staff. Always, as a board member or a manager, if somebody's doing the separate payroll, once a month, you should be going into the reports and looking at their pay rate. Because you looking at their bottom line doesn't know if they went in and changed their pay rate $1 more or $2. You might not notice that. So always look at that, do a random selection so you know there's accountability. Examples of internal controls for associations: cash, always internal controls on cash, always oversight to set of eyes on cash. Cash is king. Cash is where the money's going. Accounts receivable. Make sure that you're looking at those receivable reports, making sure people aren't kiting. What I mean by that is they're looking at it and saying, an example is somebody pays for, they come in cash and pay for the receivable. The person pockets it. The next check comes in, they posted that person count. Everybody's account is 30 days delayed. They're actually doing that, and the process is because they've taken some money. Always be reviewing those reports and seeing, is this person delinquent? Maybe checking on it. Inventory, fixed assets, always making sure you have an inventory of your fixed assets. Prepaid insurance, make sure, this is an example, that if you have an insurance company, you have an attorney, you have an auditor. As a board, you've met those people. Make sure that they exist. There's an incident where somebody was a bookkeeper, was cutting checks themselves and opened their own insurance name in a bank account. They were cutting themselves, but they never had insurance. Make sure you're meeting your professionals as a board member. Security deposits. That's one of the issues I have a lot in many financials is there's a security deposit on the books they're collecting from outside owners. They come in and put it down for, they're doing construction in their unit, but there's no list of who that goes to. There should always be, for good internal controls, if somebody comes in and gives you a check for $1,000, there's a list that ties out to the financial statement of who that's owed back to. That's controls. You need to make sure who it's owed back to. Loans and lines of credit, who's approving them? Who signs off on the lines of credit? Should be the board of directors. Most banks do require that, but who is looking into it? Are you looking at all the banks that are actually in this industry, making sure you're doing the best benefit for your association? Income, maintenance fees, laundry income, golf income, restaurant income, high risk areas for those other types of revenue, especially laundry income. Incident where a lot of these older communities have coins that they put in, and somebody goes once a month, collects all the coins and takes it to the bank. Well, there should be more than one person collecting the coins every month. There should be 2 people going, bring it to the office, somebody else counting it, somebody else taking it to the bank. Because those coins can add up to $8,000, $10,000, and who knows if you're collecting all of the income that is shown in there. That's why some of the communities with laundry income outsource it. They outsource it to people and they just collect a percentage of the revenue from these contractors. Expenses, contracts, payroll, electric bills. Look at those. Even randomly look at the electric bills. Make sure that somebody's not putting their own personal electric bill there once a month and you're not realizing it because you have $1 million in revenue. You're not looking at that. And then the reserves, making sure there's controls on most of that reserve money. I'll give you an example of weaknesses in internal controls. This is an employee was allegedly attempting to embezzle $1 million from the company she worked for. The woman was in charge of entering timesheets, payroll data in the computer system, and allegedly placed 2 associates on the payroll, even though they were not employed by the company. Then she kept 2 terminated employees on the payroll, but instead of having the payroll going to their bank accounts, she switched it to their bank accounts. They didn't catch this till it was almost $1 million in fraud that she was taking from payroll, because nobody was looking at the payroll reports and saying, do these employees exist? That is one of the high-risk areas in self-management. This alleged fraud demonstrates ghost employees as a fraud risk. It's one of the probably topic 101 in fraud with payroll in college. They talk about is that's the area that's a very high risk, is making sure that if you have internal payroll, that the manager's overseeing it and the board is getting a monthly report of who was paid, who are the employees, and making sure they're looking at that. It's very important to look at that. That's a very big weakness in internal controls for self-managed. What is fraud? Various ways to define. It's a deception made for personal gain, encompasses an array of irregularities and illegal acts, an intentional deception. That's fraud. Mismanagement is completely different. You're not intentionally trying to commit an illegal act. A knowing misrepresentation of the truth or concealment of a material fact. Conversion of obtaining money or property by false pretenses. An illegal act characterized by deceit, concealment, or violation of trust. I want to make sure people really see the meaning of that, because I hear so many board members call me and they'll say, the prior board committed fraud. And there was no fraud. There might have been mismanagement, or they said they hired the vendor that was the most costly. And I'm like, that's not fraud. They felt that vendor was the best vendor out there, because cheaper is not always better. So it doesn't mean fraud. You want to make sure you're getting the best service for your community. And sometimes that costs more money. Fraud rationale. Why people rationalize taking, people say, how could somebody do that? Pressure attitude, the need for money, personal satisfaction, or fear of failure. Opportunity is the number one thing. They have the opportunity because there's no accountability from the board or the manager overseeing it. When there's no segregation of duties and there's no good internal controls, there's opportunities for them to take. And fraud always starts small. Somebody takes a couple $100s and says, wow, nobody's looking. It grows bigger and bigger and bigger because they take the opportunity nobody's overseeing. Rationale, willingness to commit fraud. They rationalize it. These boards, they are worth so much money. I should be making more money. So I'm just going to take it, because that's the rationale behind them. They think they're entitled to it. Target areas for fraud. Yes.
So Nicole, first of all, the feedback we're getting from the attendees, the positive vibes, and the great effort that you're putting in, it doesn't go unnoticed. So thank you for the attendees for sending out the positive vibes, and thank you, Nicole, for the class. It's actually one of the best ones that we've ever had. I've got some questions for you because we're getting a little bit behind on the questions and on the time, so I'm going to just shoot them to you rapid fire.
Sure, that's great.
What are your suggestions? Do you suggest all board members review the monthly P&L expenses? What's the treasurer for?
Great question. So I believe all board members should be reviewing the P&L and actual expenses. The treasurer should be looking at the more detail. They should be going into the general ledger detail and seeing that. If anybody, my email is on there. I actually have put together the role of the treasurer, and I put a whole memo together. So if anybody wants a copy of that as the treasurer, but as the board, if I was on a board, I believe you should be getting the P&L and the financials and reviewing it all. The more set of eyes, the better, and you're ultimately all responsible.
Do external auditors typically talk to board members during the annual audit?
Actually, it's a requirement. So it is a requirement to get an understanding of the financials. So we actually interview the board members when we do our audits. It's either the president, the treasurer. They should be talking to the board of governance in an audit.
So what is the example of internal controls on reserves, separate accounts?
Great, of internal, yes. So the state of Florida states that you can commingle for investment purposes. I don't recommend that. Good internal controls is to have a separate bank account for reserves and operating. So as a board, when you're reviewing those bank statements, it's easy to review the internal controls and see what was paid through those reserves.
So, and I deal with this a lot. One of the companies deal with Avid Exchange for payables. Looking at the bank statement, most of the payment withdrawals from the bank account just show a Avid pay service, no identifying information. Shouldn't there be a corresponding report for these payments?
Yeah, so I deal with Avid a lot, and it's a good program. They do a good job. The payables are good. Yes, what I be getting is a copy of the check register, the P&L, the financial statements, and then looking at that, because you're right. That's what it shows on there. It's a good system, but that's how it shows on there. So I would be getting the check register so you can verify what you approved, that it's on the check register.
internal bank account transfers, do they need to be approved by the board members? This is a no-brainer.
Yes.
Absolutely.
Absolutely. Board
100%.
members, 100%, no questions asked. So target areas for fraud awareness: cash, accounts receivable, inventory, security deposits, expenses, time reporting. They're areas of fraud that can take place. Conflicts of interest. The state of Florida under 718 requires you have a conflict of interest policy. I think it was one of the best things they put in place. Any company should have a conflict of interest policy. And how do you follow it? Great internal controls. You should have a conflict of interest and a fraud policy. Very important in internal controls. Interesting statistics. Florida is ranked #2 for the top consumer locations for victim of fraud. 40-year-old people are the #1 target for fraud. It's interesting. I think Florida is #2 because you hear a lot of the IRS, and Bill knows this, a lot of the IRS scams are down here. They're trying to target the elderly and trying to get them, to give their information, give their social security numbers. What was interesting to me is the top payments of fraud was not cash. It was check, money orders, other credit cards. Cash was #5. So it's very interesting. I always say, people will be like, you're a typical accountant, but I reconcile my bank accounts every day, personally. And you know why? Because if anyone ever saw the movie Office Space, where they cipher off $1 and the guy ends up getting, millions of dollars, that little penny that they're ciphering off of you, that 25 cents that you're saying, I don't recognize, but I probably did spend it. They're doing it to everybody. I always say cash, you need to look at your bank accounts because even credit card statements. Interesting point. I'm sure you've all seen the movie Catch Me If You Can. It's a great movie. The guy actually works for the FBI now. He's all about fraud and investigation and check fraud. Punishment for fraud and recovery of stolen funds are so rare. Prevention is the only viable course of action. Why I put that in there. A lot of times fraud happens and the person is let go. They don't prosecute. They don't go after them. They just let the person go. They don't even recover the funds. When you put preventable measures in place, it's most likely that it's not going to happen. It doesn't mean it can't, but it's most likely it won't. Some last minute quotable quotes. I thought she was doing that. The staff wouldn't approve his transactions anymore. They would always bring them to me for approval. Everything she does is an exception. I could never get her to put that in writing. He wore me down, so I did whatever he said. He was always sending emails after our discussions that would interpret things slightly different. Like, oh yes, you can take the bonus, but we never approved it. We were concerned when we saw the request. We only let him do it one time. He told us it would not be approved. We don't have enough staff for adequate segregation of duties. She was mean to the staff if they asked her questions about expenditures. There is a problem if someone has a problem with you asking and they get mad. And I trust him or her. That's probably the #1. A lot of trust. Somebody's been with you 20 or 25 years and you're saying they've been with us so long. Sometimes that's the areas you really need to investigate in. And in the end, does it make sense? Is it all documented? Everyone that should have approved it, did they? And given all the information, would have it passed the headline test? I'm going to turn it over to Bill for some exciting tax news.
Thank you, Nicole. Well, actually, you're a hard act to follow, but I'm going to start off with a little bit of background because as Nicole can tell you, we've had a pretty big number of associations that have gotten not only tax notices from the IRS, but from the state. And it's been a little bit disappointing on our part because of COVID and the fact that they were basically shut down just like everybody else. Some staggering statistics to start out with. In January, there was 9.2 million returns that were unprocessed, paper returns that were unprocessed. The IRS in February came out with a hiring bid where they were going to hire 5,000 people with no tax experience whatsoever because they're shorthanded. They've now gone back to a situation where they're going to use, because they are shorthanded, outside collection agencies to collect on outstanding tax liens. One of the other things that we see as well, I think I'm up to 18 or 19 months from writing a letter to having the IRS at least respond. And that goes the same with the Florida Department of Revenue. When they shut down the service, all the service centers were shut and shuttered. everyone that was an employee went to work from home, so to speak. And more importantly than that, the correspondence that they had, that the taxpayers had written back and responded to the IRS, sat in tractor trailers in the service centers unopened for well over a year. So the associations that have had issues, some of them, for example, might be a situation, since all the 1120H returns are filed paper, the 1120Cs are filed paper, and even the 1120s are, that are coming out of the condos and the associations, they're processed manually. And if they were sitting out in a tractor trailer, it's a good thing that they're probably not. We've had one situation about 2 weeks ago where they received the return for 2021, but no payment. And then there was no payment because the overpayment from 20 wasn't posted yet. And so that's an issue because those people had sent in a paper check. So they've got to put a trace now to see if the paper check was ever cashed. They didn't use EFTPS. On the Florida Department of Revenue side, it's a similar situation. All their personnel work from home. They've got a couple service centers in the Florida area, one right here in West Palm. And there's probably more authority and autonomy on the people that are responding to the taxpayers' queries and also to the notices that they're sent. And it's up to their discretion usually to actually either abate a penalty or close an open tax situation. And we've had mixed results in that regard. So with that, I just want to get into a little bit of an overview of what we're seeing as current tax trends in the associations. The first area is access to taxpayers' individual and business information. They're using that information, if it's not secure, to potentially file a fraudulent return. That is so prevalent today, it's unbelievable. Paying vendors and individuals who haven't submitted a signed Form W-9, I'm going to get into that. The timely filing, as Nicole indicated, of Forms 1099 MIS, the new 1099 NEC, and the 1099Bs is also a big issue as well. On the self-managed side, we just had a call about 2 weeks ago. There was a question regarding hiring employees without validating their citizenship and residency. And also we've had some questions on outside contractors versus employees. On the sales tax return side, we have a whole plethora of issues. Certain transactions in an association requires that sales tax should be collected, remitted, and timely filed. And then also, I'm going to tell you an interesting story later on about use taxes when purchasing property out of the state. Once again, Nicole's saying on the payroll taxes, self-managed associations are responsible for the timely filing and funding of the federal and state payroll taxes. And that's a big thing. They have this set up as an automated system now, and the notices go out immediately as soon as you miss the filing and the payment deadlines. Failure to pay tax and failure to pay timely are now penalties that used to be more of a manual process, are now automated. They look at the date that the return comes in, the tax that's due, whether it was extended or not, and once again, they're sending an automated notice out. And then the last area is the federal tax payment system. So most people don't know that the IRS does not accept checks anymore in payments of returns, okay? You need to sign up for the federal tax payment system, which is EFTPS, and we're going to get into that as well too. And the issue with that we're seeing is that, as I said, there might be some returns that the payment was made via EFTPS, but the IRS hasn't processed the return yet, thus the notice. So we're going to take a little bit deeper dive into some of this information that I just pointed out to you. Protecting the taxpayers' reporting information. Nicole?
Yes. Oh,
Okay.
it's not working. Hold on. There
Okay.
Like
All right. There we go.
Real quick, Bill, I got a great question here. What if a vendor puts an
Can
incorrect?
everyone hear me? Nicole,
Yes,
can
we
you
can.
nod if
Yes.
you can hear me? Yeah, because the power just went out here on this overhead
Oh,
lighting.
okay. Yeah, we can hear you.
Okay.
You're still live, Bill.
Okay,
What
thanks.
if a vendor puts an incorrect TIN or SSS number on their W-9 and you don't find out about it until the IRS informs you? Is there a way to verify these at the time of receipt? It may have been an error, but it could have been an error, but it could have been intentional as well.
Yeah, so first of all, best practices, and I'm into the W-9 slide a couple down, but I'll answer that question now. With the W-9s, it's always best practice to get any new vendors or individuals that you're paying. You need that W-9 because the responsibility is on the association for withholding if they don't provide you the information. So that's number one. Number two is we've seen that they're matching up the information that the association's submitting to this service with what's on record. And where that information doesn't agree, they basically go back out to the association with this CP 1200 letter and say to them, these are the people in which you issue 1099s to where their information doesn't match. The responsibility then of the association is within a 2-week period, they need to send out a blank W-9 to those people that they issued on that letter. And if they don't receive it back in 2 weeks, any subsequent payment that's made to those vendors or individuals, there needs to be a 24% withholding tax that's withheld from that gross amount until they provide that information. The association's on the hook for withholding that and then subsequently remitting it. To talk about this, protecting the taxpayer's reporting information, unauthorized access to the taxpayer data, such as a name, address, social security number, or federal tax ID number, is the biggest fraud that's going on right now. Fraudulent returns started back in 2010. I actually had one of the first when I was working for another firm. An individual was filing with her husband. She went to file her tax return. She lived out in Wellington, or they lived out in Wellington, and they filed the return and they got a notice that the return was already filed. And so what happened, it probably took the IRS 3 years to figure it out. A receptionist out in the doctor's office in Wellington had actually accessed patients' files, which at that time included their name, address, social security, date of birth, all that information. They sold that information to a party that then turned it over to people that were in prison that had access to computers. And what they were doing is filing a fraudulent return with all the taxpayer information, claiming bogus withholdings and bogus tax credits. At that point, the IRS still had, or had already started that program where you could get your refund put into your bank account. They opened up a bank account. As soon as that refund was put in, they closed it up and shut down shop. Now, since that 2010 period, the IRS has come a long way. And one of the things that we try to tell some of our clients is, if you think that you may have been hacked, you need to go out to the IRS now and make a request for an identity theft PIN. And what it is a 5-digit number. It's a new number that's given every year that you either, when you paper file or you electronically file, you put this PIN number in and the IRS will process that return. Any return that doesn't have that PIN number for that social security number will not get processed, and the IRS will assume that it's fraudulent. Nicole,
Can I interject something?
Yes.
You can request a copy of the business tax license when you take on a vendor and match it to the W-9 number, or a copy, if they're a sole proprietor, get a copy of their social security card.
Yeah, some of what we see, that's great point, Peggy. Some of what we see in terms of these CP 1200s with respect to vendors is they've got, as you said, they've got a business name that they're registered with in Sunbiz, but they have a DBA bank account, and that's what you have them in there as a vendor. So those two names don't match up. And that's really what the issue is with respect to most of the vendors. The individuals, it's a whole different ball game on the individual side. Sometimes the social security number is bogus, sometimes the address is, sometimes the name is incomplete. But with the vendors, that's what we find to be the most issue is a DBA. This is the accounts payable. All vendors should complete and sign a Form W-9, which is a request for the taxpayer identification number. This is another area where when the association or the management company gets the information, that needs to be put into a secure location after they enter it into the AP system so that this information isn't out there for anyone to access. We already went over that. Employee hiring and outside contractors. I started to say that we just had a situation about 2 weeks ago where somebody that came in, it was in the process of getting a green card or permission to work in the US, but they gave an application, not an approval. And of course, there's specific rules around the fact that you can't legally hire that person until they get to that point that they get that green card and the approval for that green card. So we told them that they couldn't accept the employment with them to start out with. But that's something that's obviously really big and gaining some speed as far as that goes. We can go to the next slide. Okay, sales tax. Wow. I don't know where to start on sales tax. So one of the things that I don't know if people have heard or not heard, but for those places or those associations that rent out commercial space, say if you're a condominium and you've got ground level space that you rent out, you pay a commercial rent tax. And the commercial rent tax over the past several years has been brought down. The state portion of the rate is 5.5%. The individual Palm Beach County, for example, is 1%. And there's been a lot of talk in Tallahassee about actually dumping or stopping the commercial rent tax because we're one of the few states that does have that tax. And I think that they're on that path and that road to do that. They passed legislation approximately a year and a half ago where they consented to reduce the commercial rent tax from that state rate of 5.5% to 2%. That's going to get triggered when the Florida Unemployment Trust gets refunded post-COVID. And from what I was in Tallahassee, I believe it was back in January, and there was a discussion at that point that they think that that actually might come to pass this September, although now that there's the unemployment's going back up again, I'm not really sure, but they were thinking that that 2% rate was going to get triggered at that point in time. One of the other things that I always tell everybody is that Florida DOR is getting extremely up to speed and in sync with other taxing authorities. They share information, and it's not only electronic information, but they also communicate as well at some of these places. I'm going to just tell you a little bit about a condominium on Palm Beach Island. They decided that they were going to go buy new furniture for the pool deck. And so unbeknownst to anyone else, they went online and they purchased the furniture, and it was shipped from, I believe it was in Tennessee. And lo and behold, probably about 6 or 8 months later, they got a notice from the state of Florida that said that they were going to get a desk audit for unpaid sales tax. And so, of course, they called us up and they said, you know, can you help us out? And I actually said, yeah, sure, we can do that. We got a power of attorney. We went out and we contacted the state, and the auditor told me, you know, you need to determine and file for that 2-year period where you haven't paid the sales tax. I went back to the client. I looked at all the vendor files. There wasn't a vendor there that was outside of Florida. And I scratched my head and I said, well, you know, I'm really not sure whether this notice was sent in error or not. And I knew the auditor that was auditing from a couple of other audits that we had. And I called him up and I said to him, listen, I went through the whole vendor file here. I can't find it. I said, can you help me out? He said, absolutely. He says, let me look it up and I'll call you back in a half an hour. And it turns out that when he called me back up, he said it was a purchase on the credit card from this association to purchase this furniture, this pool deck furniture from Tennessee. And we actually stopped the truck at the waste station coming into Florida. We got the bill of lading, and here's the amount of tax that should have been collected. And just goes to show you how sophisticated they're getting in the ways in which they can collect the tax. So with that, there's one other piece that I also want to talk about that affects the condos and co-ops on Palm Beach Island that recently came to our attention. The town of Palm Beach is actually issuing notices to condominiums and to cooperatives on the island for them to register for the Palm Beach business tax. Now, the Palm Beach business tax is, I think it's been in effect for a number of years. It's a tax that's based on your receipts. It's not subjected to those that are self-managed, but to the extent that the management company has an on-site manager causes the management company to be subject to this Palm Beach business tax. And back in June, they had a deadline as of June 30th for those management companies, if you will, to file and show that they've got the business tax receipt. I believe it was extended to the middle of July, but it's something that the management company should be aware of because they're going to be actively and proactively going to look for those associations that do have a management company on the island itself.
Bill, if they're self-managed, that doesn't apply to it?
That's correct. So it's really only the management company because it's the business that they're looking for. If you're self-managed and you're not using a management company, that's why, you know, and they don't really have a handle at this point. As you know, they sent out a list to everybody, not knowing who was self-managed, and when I spoke to the person in Palm Beach, you know, they're kind of looking by issuing that to find out those that are self-managed versus the management company. So I'm assuming that if the management company goes to file, they're going to look at the receipts that are associated with all the properties that have a on-site property manager.
Okay.
Okay, some of the other things that we're seeing is that they're getting sophisticated, obviously, in picking up the commercial rent or the bed tax, if you will, for the condos that might still be in foreclosure and owned by the association. So that's something that the association needs to look at. They've got that requirement to actually pay and file that tax if there's no lease or the lease is less than 6 months. One of the other issues that we're also seeing is that there's a number of condos that actually serve the owners by having handyman work being done. And so with the handyman work, what's happening is that if that handyman comes up, for example, to adjust a screw on a light switch, the labor that is in that work order is not subject to tax. But as soon as that person puts in a new screw or in effect a part or even a light bulb, then not only the property becomes subject to sales tax, but the same with the labor. So that's something that everyone needs to know. We put together a great checklist of those situations that you know, involve the handyman. Like, for example, one of the other situations would be is if you're in a homeowners association or even in a condo and you have the hurricane shutters, if that handyman came in to close or open the shutters, he's not doing anything in installing personal property. So in that particular case, the labor that's being charged wouldn't be subject to tax. So there's a lot of nuances in the law with respect to that. Some of the areas that associations aren't really aware of that should subject them to sales tax is parking lots, boat docks, storage units. All of those are subject to sales tax. If you've got, you know, a club involved, you've got golf clubs and carts, bag storage fees, trail fees, locker fees, driving range fees. Now, the only fun fact out of this whole thing in terms of the sales tax is that we have probably 2 or 3 associations that charge for parking. And under the federal statute, under 528, if they're billed at the beginning of the year for the entire year, and it's part of the mandatory assessment, it's automatically considered exempt function income and not subject to tax, which would also make it not subject to sales tax. So if you're an association that has that rental of those spaces that are monthly, you may want to consider looking into your docs to change that and save yourself some sales tax. That's one of the fun facts today. Can we go to the net? Oh, federal tax. Okay, I'm jumping around here. Can we go to the federal taxes? Okay. So I talked about before on the federal side, if you're an association that pays federal tax, you need to be set up in EFTPS. I talked to somebody yesterday that used the management company to file their payroll tax returns, and the payroll tax returns were set up in EFTPS. And I actually told them they had a balance due with the return to go back to the payroll company and see if they could, in effect, pay the tax through their EFTPS, because they only assign one federal ID number and it should be the same.
Hey, Bill, I got a question. So
Yeah.
if you're a condo and you have a clubhouse and you occasionally rent it out, is that rental fee collected subject to sales tax?
Yes.
Okay.
Typically, a lot of associations don't, because it might be de minimis, but certainly it is subject to tax. I'm not telling you not to pay it, but some associations consider it to be de minimis. But if you're regularly renting out the clubhouse, then you got to provide for the tax.
What about seasonal rentals? Are those subject to bed tax?
Could you repeat that?
Seasonal rentals. So let's say there's a seasonal rental that's rented by the association. Is that subject to bed tax? And what about seasonal rentals that are rented by a unit owner?
Well, the unit owner is responsible for paying the bed tax, okay? If there's not a lease for 6 months or more. If the units are owned by the association and they're rented under the 6 months, then they are subject to tax. Over the 6 months, once again, no tax.
Thank you.
I kind of can you go back to the federal tax slide, Nicole, or forward to the federal tax? Yeah, no. Back up. Yeah, okay. Okay, just a couple more things on the federal. As I said, one of the big things that I want to make sure that everybody's aware of is that when you're filing or we give you, or your tax preparer gives you the 1120H or the 1120C, or even the 1120 return, make sure that it's signed and it's dated. And my recommendation is that you file it via USPS certified mail return receipt. Because what we're seeing now is, as I said, the returns might have been sitting in a tractor trailer for 2 years. The IRS turned on their automated notice system, and now you're getting a notice that you didn't file the return. And you really need to have that, to stop it in its tracks, is to have that certified mail receipt card to show that you timely filed the return, and then it's on them. Otherwise, it's a difficult task, if not, draconian, to have to go back to them 3 and 4 times to tell them that, yes, you did, but you don't have proof of timely mailing. So that's probably pretty important to understand. I mean, what have we done? Probably 100+ returns, Nicole, would you say?
Yeah, probably more.
Yeah, well, and let me add multiple times, because they haven't responded to the first time.
Exactly.
Okay, I'm going to jump into penalty assessments here. One of the other things that I pointed out as well is that it used to be a situation where, they wouldn't necessarily assess you penalties for late filing or failure to file. Not the case anymore. They've got an automated system right now. When they go to process that return, it's keyed in and it's almost automatic. Florida is relentless in issuing penalty assessments. For example, if you're a housing co-op, you have to file a Florida return. A Florida return, if you're not going to file by May 1st, requires an extension. Doesn't matter whether you have tax due or not. If you don't file that extension, you don't file by May 1st, they're going to send out a notice for $330, even though the return shows no payment. No payment and no tax. And extremely hard now at this point in time to have that abated, because depending on the person that's in the service center, they may or may not, want to have the ability at that point on that day, or they're not in a good mood to abate the tax. Second thing is with the sales tax. So if the association pays sales tax and files sales tax returns, usually if they're hooked with a management company, they're going to file online and they're going to do the payment online. But be aware that whether they do it or you're self-managed, if you're paying Florida sales tax, you need to file, even if it's a zero return. Otherwise, it's $50 a month for failure to file penalty. And they don't abate that according to the sales tax statute anymore. So that's important to know. Same goes true with those self-managed associations that file a Florida unemployment tax report. If you're not filing that month or that quarter for employees, the return has to be filed for zero. And that the sales tax, unless it's your last return, there's a box to check that says last return. You need to make sure that that's checked. It's even on the online form so that it stops the future filing and it'll stop the notices. On the federal penalties, once again, it's automatic again. There might be two penalties may apply. There's a penalty for late filing, a minimum filing late, and then a late penalty payment. Typically, what we see is on the association side, if we're filing a 528, which is an 1120H, we're usually very successful in including a penalty relief form, which is Form 9100, which will allow you to file an effect late and not ding you on it. If you're filing an 1120 or an 1120C, not so lucky, because under the statute, it doesn't apply. So make sure that, when you are filing or you are paying, that if you are late filing the tax, that you get your preparer to click on, and this way it'll save you all the aggravation of subsequent notice after notice to pay the penalties. There is, however, an opportunity, which they do check, for a first-time abatement penalty on the federal side, and they do have to abide by that. But I will tell you, if you get a subsequent penalty in that particular case, they're going to look it up, and if you've already gotten a pass the first time, they're not going to allow you to have the second pass. So I think that's about it. Yeah.
If anybody has any questions, we can open up the last couple of minutes to.
Yes, the Q&As have been amazing. One more, does the board need to sign or file returns, or can it be filed on behalf of the board by a preparer?
No, the returns have to be signed by the officer or director on the association, signed and dated. I will tell you that we've had more than a few where we've had to go out and get power of attorneys to represent the associations. And I had a frustrating time about 2 months ago where what you have to do is you have to submit the copy of the signed power of attorney to Tennessee, wait 2 weeks for them to process it before you can get the opportunity for me to be able to go in and look at their transcripts and their tax accounts. And so this one association didn't, get permission. And I think I waited about 2 hours online with the IRS with the practitioner hotline. And it's a whole validation process, which I won't bore you with, to make sure that I'm the person and, you know, everything's in order. And after the last question that they asked me, if the power of attorney was signed by an officer because they went into Sunbiz to check, but he didn't date it. And they said that they couldn't talk to me. And I basically wasted the 3 hours that it was on the line. So they definitely look to make sure the returns are signed, and they have sent back returns that have been unsigned where they want you to go back and get the officer that was an officer or director at the time that the return was filed, not a current one.
Hey, Bill and Nicole.
Into control.
Yes. I like the last comment in the Q&A. One of the best webinars I've ever attended, and I can't agree more. Nicole and Bill, you did an absolute fabulous job with over 200 attendees. We answered over 50 questions. There's a lot of questions about slides and recordings. You're going to get follow-ups from all of the sponsors to make sure that you need our services or our products. Nicole is obviously going to send a follow-up to all of the attendees. She will provide her slides. Hopefully Vinteum will provide the recording at that point. So thank you for everybody that attended. I'm going to turn it over to Peggy, and she's going to close this out.
Okay, great. Yes, awesome class. You always do a great job, you guys, and love to have you and hope to have you again before the year's out. I just want to mention a couple things. There will be a sponsor sheet sent to everyone who actually reserved a spot, even if you didn't attend. And it will have everybody's contact information and also email addresses that you can reach out to them individually. This is a very large class, and last class I had legal update. It took their staff about 3 weeks to get all of the credits processed. So please allow 10 to 14 days for Nicole and William to get the credits processed. If you don't receive a credit or see it on the DBPR by August 15th, please reach out to me directly. I want to thank you guys again and all the sponsors for attending today, and to watch for the next webinar, which is going to be August 17th. It's another 1-hour IFM class on budgeting and saving money in the association by Schooley Mitchell. Until then, stay safe. Thank you.
Thanks, everybody. Have a great day. Good seeing you all.